All right, so time for today's daily trade recap on NASDAQ futures, MNQ. I trade the micros. So yeah, let's dive into it. I guess we'll switch screens over, look at start with the daily bias. So I was expecting the previous day low to be tapped. This candle on Monday closed inside this previous candle. Just looking like it kind of wants to start to roll over a little bit. So I had a little bit more of a bearish bias. We had SMT at the highs coming into the 4 hour. So this is the 6 a.m. candle. The 4 hour had a change in state of delivery and is starting to respect bearish PD arrays. So this to me is, while overall bullish, like on the weekly, etc., signifying potentially some kind of reversal retracement. Probably not reversal, more like just retracement kind of at price action. So I had targeted these equal lows down in here at the very least, and noting all this trend line liquidity. Like there is tons of liquidity that needs to be rebalanced. If we go back to the daily, we can see just on the daily how overextended price is without doing tons of rebalancing. So this is prime targets to come back to, in my opinion. So yeah, the 4 hour was looking a little bearish to me. Same thing on the 1 hour. Order flow was just in a bearish retracement. So wanted to kind of keep that in mind. I didn't fully know where it would tap into in reverse, but I did know, or I did suspect, that the previous day low was a target for today. So here is the 8 a.m. candle tapping into that previous day low. And then here on the 15-minute chart, I was kind of wondering if it was going to be a London high of the day, and I still don't know. We have London tapping into the new day opening gap and some other 4 hour gaps with SMT potentially forming a high of the day. Not totally sure. And then London formed a breaker with midnight, which typically does suggest more downside. And we did get that downside. But then when 9:30 opened, we can see this blue dotted line right there, 9:30. We tapped into a significant higher time frame level. We had opening price. So here's the opening range gap. Opening price was above and midnight was above, and same thing, new day opening gap was above. However, it had been retested right there. So kind of gave myself, it was a little bit more of a mixed bias. I mean, I was bearish, but given the level we were tapping into, I was okay with taking a long. So we had I made a couple of slight tactical mistakes today, and you can see wherever it is, P&L is green, which is good. But here's the long I took. Let me pull up my executions. So what we had here is the blue vertical dotted line is the 9:30 open. Prior to 9:30, London low was taken on NQ. And then when 9:30 opened, it almost tricked me out. It formed an inversion, a breaker, and I was not certain. I kind of wanted to enter on this candlestick. Let me zoom in a little bit, and I'll remove my long. On this candlestick here, it created an inversion, a breaker. It had SMT, it tapped into the London low. But given that it was prior to 9:30, I didn't want to execute, and I don't even like the 9:30 candles to execute. And then it started to look like I was going to miss it. Created a little bit of FOMO, but I stayed out, watched it play out a little bit. I wanted to see at least a couple candles and let a couple candles play out. Would have stomped on any longs that were taken right in here. Came down into the previous day low, at which point now I was more comfortable to engage. So there was an inversion fair value gap within the macro. So we had SMT, higher time. So here's everything we had. We had an IFVG. We had the previous day low. We had a 4-hour low taken. We had SMT. We had high probability liquidity. So that was these equal highs right here, this trend line liquidity all up in here, and 12 a.m. Now, one of the things that kind of convinced me to go against the order flow was this trend line liquidity. It just looks so clean. None of this was really mitigated. You can see every lower high has not been stop hunted. So that to me just looked like prime for targets. So that was the only con of the trade, was it was against the order flow. Now, I got a little flubbed up in the entry because I didn't get the risk that I wanted on this trade. If we go to this candlestick here, right here, when this was forming and it was coming way up in here, I thought it was going to close up in here. And so I reduced my number of contracts from 4 to 3, thinking I was going to be possibly marketing in up in here and needing a much bigger stop loss, something like this kind of thing. And it came back down, and I had a limit order set, and I had changed my contracts to 3, so it changed my limit order, and it just instantly took my limit order before I could change my limit order up to 4 contracts. So not a huge deal. I mean, it's FOMC week. I'm okay with lower risk a little bit, but nonetheless, I was trying to at least keep 150 risk per trade because I need to get it up to the 250 mark. And I didn't want to go backwards and reduce risk less. So there's like 100 risk on this trade on this account. And so that was one mistake that kind of happened. Just everything happened so quickly that I wouldn't even call it a mistake. It just happened. It was just so quick. I didn't get in the trade with the contracts that I wanted. Now the mistake happened is I got a little greedy. Is we can see 3R was here. However, I didn't get 3R. I actually had my stop loss up, or my take profit up, I think at this high, like here, a little bit before it, I forget. And I didn't get that order fill on that take profit before it slammed back down in like a fraction of a second. And basically given how strong the push was towards buy side, and it was forming these gaps, I was trailing my stop loss. I was already at break even because my rule is when I go to 1R and prices expanded away from my entry, I go break even. So I'd already gone break even. And I don't really have a rule for trailing my stop loss. I just have kind of done this thing a little bit lately where like here's 3R, and if it's really pushing hard, I kind of keep pushing my take profit up along with my stop loss, just kind of bracketing them. So like if here's my take profit, here's my stop loss. Well, don't mind the colors. I push up my take profit, I push up my stop loss, and as it keeps wanting to push, I push up my take profit, push up my stop loss, that kind of thing. I don't know if I should be doing it or not. It's worked out a couple times in my favor to get some 4R trades. But anyways, going against order flow, that was probably my clue. And we had a 10 a.m. Red folder coming up. I figured with the move here, I could get 4R out of it before 10 a.m. But the key thing was being against the overall order flow and not being certain if this was a significant reversal zone or just a retracement. I probably should have stuck with my 3R, because if I would have stuck with my 3R, I actually would have gotten my order filled. I'd have gotten the 3R, and that would have been whatever that says. It would have been 300. Not a big deal. So yeah, but I'm not going to complain. I'm not going to complain about 2.5R. I just wish the trade would have been a little bit larger. Like my trade on Friday was like 600. And so 250 compared to 600 doesn't feel like I hit my goal, my target. Due to those two mistakes. Had I been sized more properly and had I just left it for 3R, I probably would have hit more like 500. So I'll still take it. I'm not going to mind a green day. That's still good too. And of course, also going to take value in the lessons that I learned today. So that's pretty much it for the trade recap. I think tomorrow's FOMC, so I'll be live trading probably for sure in the PM. Maybe I'll look at the AM session, see how that's looking. I've been noticing that pre-FOMC lately has actually been not too bad. And even in one or two instances, pre-FOMC, the AM session actually provided the clean price action, and post-FMC PM session did not provide clean price action. So I'll be on the lookout for which is better to trade and possibly live stream in the morning.